Hey guys, welcome to Financial Health and Wealth, where we educate you on various ways to improve your life financially and to live long, healthy lives. Today, we're going to talk about whether you should rent versus buying a home. And if you'd like to see more of this type of content, then like, subscribe, hit that notification bell so you know about future videos. Let's get started. Home ownership is a big part of the American dream, but sometimes it might seem more convenient or economical to rent rather than buy. Here are some things to consider if you're looking to buy a house instead of renting. How long will you live in the house? When you own a home, the hope is generally that it will increase in value and that you would be able to sell it for more than you bought it for. The best way to do this is to plan to stay in your house for a long haul. So if you're looking to remain in an area for a while and put down some roots, buying a house is a strong consideration. But let's face it, not everyone is in that position. Maybe you're young and hopping from opportunity to opportunity. Perhaps your job requires you to travel frequently or change locations. You might just prefer discovering new exciting places and not being tied down. Unless you plan on renting out your property, it may not make sense for you to buy. Renting might also give you more flexibility to move about as you please. Can you afford to buy a house? So you want to settle down in a city or certain neighborhood for the foreseeable future. Does that automatically mean you should buy a house? Well, maybe not. You simply may not be able to afford a house right now. Do you have significant debt in student loans or a car loan? Have you been able to save up enough for closing costs and a down payment? Mortgages might be cheaper than rent at certain times, but that might flip-flop before too long. Are you ready to maintain your house or pay for unexpected damages? These are all questions to ask before you decide to become a homeowner. There are different costs associated with renting versus buying, and they depend heavily on where you live and the local housing market. There may be markets with heavily inflated rental prices that make your wallet cry. I'm talking to you, California. But don't despair. Using Bankrate's rent versus buy calculator can help you break down some of those expenses and educate you on your options and cost. Most rental properties require a security deposit, for example, which protects the landlord against damage caused by the renter. You'll usually put down the first and final month's rent payments when you sign a lease. When evaluating a lease contract, ask if your monthly rent includes utilities such as water, electric, gas, cable, or internet. And what are the upfront costs of renting versus buying in your area? If you're moving to an unfamiliar city, have an unstable job situation, or don't know what neighborhood will feel like home, renting for a period of time can be a great option. Homes need repairs and maintenance over time, and when you're renting, those costs are generally the landlord's responsibility. For instance, in an apartment, if the HVAC system or refrigerator breaks, the landlord has to fix it. On the other hand, as a homeowner, you'll be on the hook for those repairs and ongoing seasonal maintenance, and this can add up fast. You need to factor in these costs when evaluating if you can afford to purchase a home. Another consideration, can you afford a home that will fit your lifestyle in the next few years, or will a tight budget limit your options? For many people, renting or buying comes down to what they can afford at the moment. Mortgage debt still makes up the majority of consumer debt, currently at 68% of total. But student loans are a category on the rise, currently more than doubling their percentage of total consumer debt when compared to their 2008 numbers. Coupled with a healthier economy, these new levels of consumer debt may not be a strong concern yet, but the impact of debt on individual households is often more obvious than the big picture view of economic experts. Debt has a way of creeping up on families. It's common to hear references to good debt, usually when discussing real estate loans. In most cases, mortgage interest is tax deductible, helping to reduce the effective interest rate. However, if a household has too much debt, none of it feels like good debt. In fact, some people pass on homeownership altogether, investing their surplus income and living in more affordable rented apartments, instead of taking on the fluctuating cost of a house and its seemingly never-ending mortgage payments. You should also consider the long-term cost of protecting your new home. When I say buying a house, What kind of insurance do you think of? Homeowners insurance? Obvious, right? But there's another type of insurance that you should consider with a few unexpected benefits for new homeowners. Give up? It's life insurance. Mortgage payments and the cost of upkeep won't stop with untimely passing. Life insurance is a significant tool for homeowners because it's a great way to help protect your loved ones from a sudden and unexpected financial burden. Your family wouldn't have to lose their home because of missed payments, and if you co-sign a mortgage with someone outside of your family, the benefits of life insurance have the potential to cover your contribution for a time, not leaving that friend or business partner in a financial bind. As for the upkeep of your home, a general rule of thumb is to set aside 1% of the purchase price of your house for routine repairs and maintenance annually. For instance, if you pay $250,000 for your home, set aside $2,500 each year. So if you've already had to convince yourself that the hole in the roof is almost, sorta, kinda the same as that skylight you always wanted to put in, just imagine what your family might experience if the income that you or your spouse provides is no longer available. Not sure if you have the right policy to help out with your new home in the event of a sudden death? Then be sure to talk with a financial professional to make sure you're financing the future that you want and that you're doing everything in your power to help your family stay in the house and that you're all going to be working towards making this a home. There are a lot of differences between renting versus buying. It isn't just a matter of ownership. Here are other key differences between the two options. Homeowners can capitalize on the equity in their home and as it accumulates over time. That means that if the home's value goes up, you'll cash in on the higher value when you sell. Plus, with a fixed rate mortgage, you won't have to worry about rising rents. Another factor for buyers to consider is whether you will be able to deduct your mortgage interest at tax time. Tax laws allow those who itemize their taxes to write off their mortgage interest payments. However, not everyone is eligible to itemize deductions, and changes to the tax laws in 2018 means that there's more people who aren't able to deduct as much of their mortgage interest and property taxes as they used to. The answer to the rent versus buy a home debate isn't so cut and dried. Here are 10 questions to ask yourself when considering renting versus buying. What is my monthly budget? How long do I plan to stay in this home? Do I want stability or flexibility? Can I afford to be responsible for home repairs and maintenance? What are my financial, career, and family goals? Can I afford the monthly mortgage payments for a median-priced home in my area? Do I have enough money saved for a down payment and closing costs? Do I want to deal with the added cost and effort of maintaining a home? Are there affordable, safe housing options within a reasonable commuting distance to work? And finally, do I want to live near good schools, recreation, shopping, dining, or other amenities? If you're still unsure, it may be helpful to talk with a real estate agent, your family, or friends to help you think through the decision to rent versus buying. Hopefully, this video gave you some additional insight on the differences and a starting point for your decision-making process. So, thanks for watching, and as always, hit the like and subscribe buttons to keep getting future content, and go ahead, tap that notification bell while you're at it. Enjoy the rest of your day.